day all. Ira Epstein of Linn Associates with your financial market wrap-up for the evening. And it is evening at 7:40 p.m. I'm very late. We have been swamped here doing a lot of work on this Monday evening, the 17th of August, 2020. As I said, we're already in the Tuesday trade. So you're looking at what these markets are doing. We're rallying pretty nicely in the stock markets, as you can see. Gold, a bit of a correction after a monster day today. You know, this market was up 50 some odd dollars. Dollar index still under pressure as most currencies are gaining against it. Bonds and notes fairly stable. Energy markets waiting on OPEC tomorrow to tell us what the OPEC plus 15 want to do. Now, when I look at a weekly area chart of closes on the S&P, well, you're there. The old rally high was 33.81. I don't know where the market's going to close today, but the market is at 33.85, so it's higher than that number. We got to get through the week, though. We don't know where the week's going to end up. When we take a look at the market, though, we can see we're at a new high, 33.85 and a quarter. You can see how the market cut through these other highs now. The pattern on the chart is bullish. You have higher lows, higher highs. The market is over the 18-day average of closes. However, if a correction were to set in, you could be nasty from this level to get back to that number. So that is the problem. So you got to be cautious with it. So we start looking at the next indicators for that. The resistance now around 34.25. So as this market backed off past 4 days, actually 5 days, including today, what's happened is the Bollinger Band has gone up as prices have drifted and then made a new high, not at the pace that the Bollinger Band is advancing. So the upside target further away, don't know if it'll be hit. It's racing in front of the market. For those of you that get my updates, this is where you start looking also at where the window envelopes come in, and I don't show these here. I show them in my subscriber videos. They're going to be important. They're deviations from the 18-day average of closes. Momentum-wise, this is what's ruling the market. When you get an embedded reading until it's lost, it tells you that on the pullbacks in the market, I think, this is my interpretation, that the pros are buying these pullbacks, looking for lifts back to be at the window envelope or the Bollinger Band. More times than not, it's the Bollinger Band, except when you get in these situations where it races away from price, then you have to have another objective, I think you do, in mind. When I look at the NASDAQ, you embedded now. So if I take this away tonight's trade, both numbers at the close of business were over 80, both were over 80, and both were over 80 on Thursday. So this is just the gravy. Now what that does again is it puts the market back into one of the roles like the others. As long as this stays in place, I'm looking for potential of the upper Bollinger Band. And now we've gone from that sideways action. Is this going to be the catalyst to kick it up, or is it going to lose that reading and just fall flat on its face? So far it's looking good to the upside. Until the reading's lost, it isn't lost. In the Dow, we've been in a corrective mood. You're going to say move. Why? Lower highs, lower lows. That's a downtrend on the swing line. It's fully countered because the bias is up. When you're over the 18-day average, the bias is up. When the market is under it, the bias is down. It's a filter on other tools to see should you be having a bullish or a bearish bias in the market. And I think bias is super important as a tool of a filter, and I use it to filter the swing line. But the most important part is when the slow stochastic, which I call the granddaddy of the tools, locks in. It says to those guys, you're children. Yeah, don't matter. I'm the king of the road, and until I lose my embedded reading, all these pullbacks, you're not going to go very far on them. I think that if the market then turns up, watch out. You start getting bullish. That's how I'm reading what this is doing. The Russell is similar. I mentioned just the other day when I put this out, you were starting to kiss losing that embedded reading where you put it back into play. But as much as you had a nice rally today, you really haven't kicked the market over these previous moves. So this is still ruling the day. You've got to watch it. You've got to watch also that tendency. You get a Monday rally or you're going to get a Tuesday pullback in stock indices. You got to have your dancing shoes on and be ready to come to, if I call it, the floor party, okay? In the VIX cash, by the way, the floors, I understand, is reopened at the Merc. Don't know how that's going. The VIX, the pros are so far, I think, out some money. They're out about $1. I think they went short puts at 2010. Now, depending on which one they sold, there's deltas that happen in there, so you've got to pay attention. But in terms of the futures, you made a new low on the move. That's very disheartening, because when you do that, normally when you've gotten to these numbers, you've gotten back without making a lower low. If it were me, I'd throw in the towel and just say, okay, that's one of those trades that didn't work. You shouldn't have made a lower low. But again, I'm not those guys. In the T-bond market, in the T-bonds, you got a higher high, you got a lower low, and you're fighting a battle at the 100-day average of closes in an oversold condition. I don't see much there that anybody's doing. I can see in the 10-year note a little different pattern, but not much. You're still oversold. You have the higher high, the lower low. You're over the 100-day average. So that and the lower Bollinger Band are supportive. You almost got to them right here about 4 days ago, but you didn't quite do it, but you certainly bounced away from the lower Bollinger Band, which is what I'd expect. I don't see anything there. In the dollar index, I see an out-and-out bearish play, but it's already getting very oversold. You got to be careful here. Does the market accelerate down to the 92.53 level or start giving back some of these well-found gains today? I don't know, but you got to be careful purely because of that. Now, in order to get an ultimate embedded reading, you have to understand what markets do. They're going to first get oversold if you get a bearish reading. That's part of it, and this is the scariest part of the market. Trading lightly is what I'd advise, but I think you should have a bearish bias there and a bullish bias in the eurocurrency, but now you're overbought in getting up to those numbers. These are going to be rough markets until we either embed or get corrections in both. In the Japanese yen, after this big decline, you finally got a rally back to the 18-day average of closes. It's neutral. Momentum is up, bias is up, the swing line's down. I think this whole break now, it's correcting, and that's about where I'd leave it. Bitcoin, you're not embedded. You have 2 days for that. You've kept the bias up and the trend up. The market had lost its embedded reading back here, if you remember, and now trying to get it back. But once it crossed back over this high, and again, this was Friday, you take out that high, you lose the embedded reading. You're not playing any longer for this retracement. That's my rule that I make. So I created the rule that when you lose an embedded reading, what it does, but you have to have a stop out point. And it would be that high right there. And when you got through it, want no part of it. Don't know what it's likely to do now. But it's saying it doesn't want to correct the way that I thought it normally corrects off a lost embedded reading. Now, the differential between OC Brent and WTI, well, you'll recall last 2 weeks I was saying $3 probably too high, back here, bit too low. That's the trading range, and that's right what we're in. So I wasn't too far off on that. The differential narrowing in one more time, and as I've been saying, I don't know what to do with these energies. This is a classic pipe formation. From there comes monster moves. Eventually. This is either a top or a bottom. It's not giving us an idea of what it is. You can't go by if the swing lines are up or down here. You're overbought or you get oversold, and you're just staying in those. I'll wait for it to give me the answer. We might get it as early as tomorrow. Last, in nat gas, on the bigger charts, when you start looking at all this sideways action, it certainly looks like a base is put in for what we're going to call, this was a bottom in the market. I can make this look different ways on different reports, but I like what I'm seeing. What about the embedding reading? Well, we cannot count tonight, so let's get rid of that. Both numbers over 80. Both over 80 on Friday, both over 80, just did it, day before. Until that's lost, you're looking at the pros to buy on the break. So as high as it is, and I know brokers are going to say it can't last, you got to lose that reading for me to join that camp. What about your own thoughts, your trade selections? You ever say, gee, I wonder what to do, who can I bounce an idea off of? I want to be that guy. I want to start off your trading day early. I start recording at about 5:40 every morning. And the idea is I've already read at that point what's going on in Asia, Europe, how I think it's impacting the futures markets, and then I already know the reports that are coming out typically from 6 a.m. until about 10 in the morning Central Time. I'm going to give you all that. I start off each video with it, then we're going to review 40 charts. And from those 40 charts, the idea is to help you understand what I would think is a point of entry, exit, profit objective, and stop. Exit doesn't always mean stop. Exit can be locking in a profit. Stop can also be where you lock in a loss and you say, I am wrong on this analysis, just like the Bitcoin. Absolutely. And if you can't do that, you don't belong in futures. Let me warn you, this game will take your money before you know what's going on. So you're looking, and I look at all these markets, I realize you might just want to go to the interest rates. Well, there's a slide bar on this. Just pull it, it's going to say interest rates, away you go. Same in the meat market, same in all of them. All you do is pull to where you want to let go, and that's it. Each video is typically 20 minutes or longer. So time can be something that you're constrained by. Pull to the area you want. You've got time to learn, play the whole video, because I teach in every single one of the videos. How do you work with this? It's simple. The first 30 days, just slightly more than your big cup of Starbucks. After that, you're going to pay me about 2 of those drinks a month. That's it. You're getting 30 days worth of this. You get free access to my special reports, which other people spend $2.50 to get into. My webinar, if you go on my website, after you as a subscriber get in, other people pay $3 for it, okay? I think it's pretty good. Now, I even charge my subscribers the $3 on the video on the website if they don't want to attend the video for free. Got to pay for the time on it. It's that simple. You're entitled to it. You get an invite for all this, and I expect you to take advantage of it. We had a ball yesterday. We had 73 questions. I answered all 73 in it. Didn't put my beautiful face there. Next time I will. How do you get all this? Go to our website, www.iraepstein.com, under the word research. This video, as well as my combo, if you want the Spider ETF one with this, it's all there, and my full research package is displayed as well, and it tells you about it. You have a good day. I'm going to have a good one. I'm going to have dinner soon. Take care.